Madhu, you're clearly talking about stock picking, but going by your own constraints, you're not going to tell us the names of the stocks. But give us the features. What would you look for in terms of good stocks? What would be the acid test?
So the biggest feature is, I call them bear market survivors. Okay. So I think, last 6 years has been very challenging. If I look at from 2008 right up till 2013-14, whatever could have been envisaged in 2008 might have gone wrong. High inflation, high interest rate, globally things getting worse, liquidity being tight for part of the world, interest rate being high. So we have to look at companies which have remained resilient even between this period. That's point number one. Have managed to grow even in this period. Have not committed a big capital have not committed a big mistake of disallocating capital. Have tried their best to reduce leverage. Have come out of non-core assets. So there are a lot of companies and groups which have done well. Now Lata, because of the depressed condition, what is there in the markets, even a lot of these companies are very attractively priced because we are talking of bottom cycle earning. So let's assume for a minute that, after 2014 election, there is a very stable and a proactive government, like what even this government has been doing for last 6-9 months, economy focused.
Yes.
So who will benefit? I think these are the companies which will benefit on the upside. Okay. So let's say a company which, if it is available at 10 PE multiple, people are forgetting this 10 PE multiple. Is it a bottom cycle earning? So there is a scope for an earning revision as well as PE revision. So I think it is across sectors. So it will be company like, now rupee depreciation is not bad for everyone. Absolutely. It is bad for a few people who have extraordinary leverage on account of dollar in their balance sheet. But it is very beneficial. A lot of companies are benefiting. And now the advantage of this 62, 63 rupees to a dollar is starting to kick in. And we are seeing a lot of companies report that earning growth. And this has happened again on, rupee has depreciated by 90% vis-a-vis Chinese yuan.
Oh, yes.
In the last 6 years. So our biggest competitor in a lot of sectors was China. And in the same period, Chinese wages and power costs have gone up. So obviously this comes with a lag. So you will have a lot of opportunities maybe in export oriented sectors. As I said, companies which are likely to turn around, because of maybe stable regime. We are not talking about bullish regime, even the stable regime, but are attractively priced and have not fractured their balance sheet.
Okay, so 2 points from there, Sonia. Bear market survivors, a nice phrase that Madhu has given us, as well as those who will be able to take advantage of the growing global economy and the depreciating dollar. Sonia.
Yeah, actually I want to take that point forward, Lata. Madhu, the two biggest wealth generators in 2013 have been IT and pharma, as you've mentioned. Many of them like HCL Tech doubling, between Jan and now. Between these two pockets, if you had to put, or if you see a bigger outperformance in 2014, which pocket would it be from?
See, I again, yes, you know that my view on the pharma sector, we have been most constructive and the most bullish from 2008. But I will not relentlessly go that, pharma sector is good, so I'll buy across the pharma sector. You look at how markets have actually rewarded and punished companies within the sectors. So we continue to remain constructive on the pharma sector, and we'll have stocks even from the IT sector. So, if you caught a Madhu Kela in 2006, you would have made a case that, these stocks are very expensive and we will look for cheap companies and we look for all turnaround companies and we will look for all companies which can make 100% return in our portfolio. But today our approach is more balanced. So we will have companies from the IT regime, companies which have still on a risk-reward basis can still give positive returns, which I think even large companies in the IT space have the potential to do so. And even from a pharma sector. So I may not buy the companies which have done exceedingly well in the last 8-10 years, but I may buy companies which may have the potential to do well over the next 5 years. And you're seeing some of those companies, one pharma company without naming has gone up 100% in the last 2 months or 3 months. So there are those companies which are available, and that is what our job as asset manager is, that you keep looking at those ideas which can have a positive surprise.
So how do you approach a space like capital goods and infrastructure, Madhu? If you go by your argument that you would invest into companies that have a potential to perform in the next 5 years, how do you really approach this space? Because there's been, if anything, there's only been a degrowth in their earnings performance on an aggregate basis. So are these pockets you stay away from, or is there a tactical trade there?
No. I wouldn't stay away from these pockets. Rather, I would look for opportunities, and that's what I was telling Sonia, that you have to look at who are the bear market survivors in this sector. So look at, again, without giving names, it is very clear that company like Larsen & Toubro is maybe at a life high in terms of market cap, but there are lots of companies which are maybe 3 or 5% of their original market cap of 2008 in the same sector. So to brush everything with the same paint, maybe not a good idea. So I think selectively, you have to be very selective and you have to be very constructive. So to put things in perspective, maximum opportunities actually could come from the capital goods sector, what I'm talking about, bear market survivors. Because if you look at, today the entire engineering sector, most of it, excluding Larsen & Toubro, may be equivalent to Sun Pharmaceuticals market cap. The situation was exactly the reverse in 2002 or 2007-8, wherein the entire engineering sector, one engineering company was available for the whole market cap of pharmaceutical sector.
Okay.
So again, to say, I think, we will not be very, I would say, enterprising in saying that this XYZ company will turn around and there is a lot of hope, they will repair the balance sheet, they will do everything right, so let's buy this company. So we will clearly look at business leaders in these individual segments and stocks which are not priced in any growth or any recovery. So should even a modest turnaround happen, Sonia, I think these companies will surprise in the stock markets.
All that is advice for investors, Madhu. Leave us with one thought for traders, slightly tactical traders. Do you see, how much gains would you say the market can do before elections?
Lata, to be honest, I am not, that optimistic on the headline indices, because again, it's a cyclical thing, as we discussed. Growth, if at all, cannot relentlessly or positively surprise these markets. Okay. And election, again, is 5-6 months away, and politics, nothing is predictable, and 5-6 months is a very long period in politics. One would hope, as an Indian, as a stock market person, that we have a government which is really economy friendly, and that surprise comes to the market. But I am not overly optimistic on headline indices.
Okay, that's a reality touch. Madhu Kela, we appreciate you taking time out for us and coming over to our studio today. Thank you very much.
Thank you, Lata. Thanks a lot.
All right.